Now, the theme that has also played out this year is the regulatory delays to deal closures. And one of the largest investments by a Chinese player in Indian pharma space took a long time for FIPB approval. But now it's the good news that green signal has finally come. So Shanghai Fosun is paying close to about $1.4 billion for 86% stake in Hyderabad-based homegrown company Gland Pharma. Remember, in this transaction, KKR will also share a large stake, and it will be yet another big exit for KKR with hefty returns. Who says private equity firms are not making money?
Nisha, I think obviously first in terms of the investment experience, I think partnering with Ravi and his team has been, I think, one of our most wonderful experiences. When we look for partners, obviously, you want to partner people that you like and you trust. But I think in this case, you have probably one of the most competent management teams, just going by the track record on quality, which is absolutely the hallmark for an injectable business like this. So I think they've been a superb journey in terms of investment.
In terms of valuations in this sector, how do you see this panning out for investors who are looking at it right now, and especially with the way markets are running up? Do you think that the expectations of the sellers are way too high at this point?
The valuations are actually calming down a little bit, which is good. They're not as stratospheric as they used to be. And frankly, it's a question of demand-supply of injectables in the world markets.
Let's take it straight to the number 4 deal of this year. And Anil Agarwal has made it to the top list of deal makers this year. And year after year, that has been the same case. There has never been a dull moment for Vedanta Group. And I'm sure that same will be the case in the near future as well, because Kane-Vedanta merger is nearing completion with most of the approvals in place now. And getting shareholders' approval was no mean feat for this large transaction worth $2.3 billion. Now, rationale is simple: create the largest natural resources company in the country and put to use the cash on books of Kane India for future growth.
It was very important to create a diverse company. If you look at to diverse the risk, to create a stronger balance sheet, to give better dividend, and create tremendous value. For this, you need a diversified resource company, and merging Kane into the Vedanta, that was the right move.
So, Mr. Agarwal, what are the benefits for the shareholders of Kane India by way of this merger?
See, the oil price, fluctuate. They have the risk has been balanced for them. They will have a balancing on the metal side as well as on the oil side. So this is the biggest thing has happened. Then you have a stronger balance sheet, putting it together. So we can expand our business much faster, much bigger.
When you talk about win-win situation, Mr. Agarwal, of course, for Vedanta shareholders, when I look at the numbers, the debt equity numbers have substantially improved just by way of merger. Now, the kind of free cash flow that the entire conglomerate will generate after merger, what is your strategy going forward? Will it be used more for debt reduction, or on the other hand, since it's a commodity play and you've seen some bit of revival come in most of the metal companies, would you be using that cash for more investments and expansion at the moment?
See, board has to take a view, but I'm a growth man. And India has a tremendous, we are still on the very ground level as far as the resources are concerned. And everything. So we will be balancing. We'll be balancing and seeing the market situation. The board will decide. Something can go to the debt reduction, something go for the expansion.
Mr. Agarwal, I'm looking at your capital expenditure plan for this year. For a merged entity, it will be close to about 5,000 crore rupees. Standalone is 4,000 crore rupees. Next year, it will decrease substantially. But you have put in a lot of capital expenditure just before the downturn really hit the metal mining commodity cycle. So do you think now the time has come, with aluminium also turning around a little, zinc obviously has been doing well all the time. So do you think this is the time when a lot of capex done in the past pre-recession is now going to start showing results?
Absolutely. And in aluminium, need of power is for India is to look at aluminium. Aluminium is is a green metal, is the metal which is going to slowly replacing 30%, 40% of a steel. Very excited that once we run our full capacity 2.6, 2.7 million ton, thousands of new factory will come up in SMEs to process these metals.
Anil Agarwal's war chest is now ready for the next big acquisition. The big man will go shopping soon. Now remember, steel has been his love for too long, and maybe it's time to woo that space as well. So keep an eye out for more developments there.